Failure is simply an opportunity to begin again, this time more intelligently. Henry Ford. And Mr. Ford saw a good bit of failure in his life, but a great deal more success. Why? Because he began again over and over and over. And of course, what we do here at chartingwealth.com is ask you to follow the charts with us every day and to be intelligent, to keep things simple, as Mr. Ford says. We have to make sure that we begin over and over and over again. That is the way we learn from making mistakes, and we always begin again more intelligently. Now, what do we see going on in these markets? Those of you who care, we'll go over oil, Bitcoin, and real estate after we handle the big four, which of course is the S&P 500 down for the day, the Nasdaq 100 also down, and as the markets ought to be, gold is consequently up, as are bonds. We like to see bonds and gold move in the opposite direction of the markets and vice versa. So in other words, if stocks are down, bonds and gold should be up. If bond and gold are up, stocks should be down, on and on. That's the way a market that is functioning typically works. When we see everything up for the day, it just gives us some worries about what in the world is actually going on. So let's go to the S&P 500 first. Down for the day, 1.7%. By the way, special training today, it is on the derivative oscillator. It's an older training, been very, very popular. And I talk about the MACD. This is before a student recommended we go to the price percent oscillator. We studied that, jumped right on it. Why? Because we want you to do the same thing. When something works better, do it. Our goal is to make successful practice trades. If I was to, I would be willing to scrap these charts today if there were a better chart out there that worked better. These charts work awfully good, but if you gave me a percentage gain that worked better somewhere else, I'd throw it all out. So again, let's talk about what we see going on. Now, the week is starting off again down. We see the average pace is still a green up candle, not reaching a higher high for the prior week. But remember, these are Heiken Ashi candlesticks. They are different than your high open, low close. If you want to take that training, you can find it at the YouTube channel and the website on Heiken Ashi candlesticks. Gosh, I think 130,000 people have taken that. It's for free. Easiest way to find it's at the YouTube channel. You see the derivative oscillator losing downward momentum. Price percent oscillator heading up. Hasn't crossed over yet. And again, that's where it is on Monday, even with a down day of 1.7%. We take a look at the 2-day chart. And that's, of course, where we can see over the last 6 days really around the same mark. So some slowing down in the up movement. We can see that reflected, of course, in our derivative oscillator losing some momentum. It's our leading indicator. Price percent oscillator is our lagging indicator. It's weakened just a little bit. So 1 day of down movement doesn't mean that the bull trap has been set and is being sprung. I mean, heck, it could be, but doesn't necessarily mean that. We see down movement in the morning and again, sort of a sideways slide doji in the afternoon. Price is still above the 4-day trend line, above the 2-day trend line. Remember, the weekly is still negative. We did see at the end of the day, the 4-hour chart crossed over going down. Derivative oscillator still positive, and the 4-hour chart's bouncing around there again as it has slowly moved up prior to. So we'll watch and see. I do expect the the bull trap rather, to be sprung at some point. Don't have any clue that it would be happening now. We just had a down day. So we'll continue to watch, see what there is going on. Those who don't know what I'm talking about, we're talking about bull trap. You want to take our training, I'll put it at the end of today's video on Corona investing. We talk about the bull trap. Great article in Market Watch over the weekend about the bull trap and how it's happened in every single instance where we've seen market crashes. Now, let's talk about the Qs. What do we see there? Down for the day, 1.18%, not down as much, not reaching a higher high as it did the prior week. It is a green up candle forming. We do see getting closer and closer to a weekly vertical crossover. It's a big week. That could happen. That could actually happen before, by the end of the week. And again, remember, we don't call a candle until it's totally drawn. We go to the 2-day chart. What do we see there? We see again that down candle is forming. Now, this is just the first day of the latest 2-day candle. I'm sorry, just flattening is what it's doing there. We see the price percent oscillator losing some momentum, derivative oscillator flat, and we see the candles pretty much flat there. Price is still above that 2-day trend line, important. Go to the 4-hour chart. We can see where that 4-hour trend line was pierced. We can see that things are getting close to a crossover, and it's been a while since things. Now, the last time they faked us out, remember? Crossed over going down. We're thinking, hey, this may be the bull trap being sprung or at least a pullback. And what did it do? It bounced right back over. Remember, the 4-hour chart's our weakest of indicators, or charts. The 2-day recross, much better thing to have. If the 2-day crosses back over going in the same direction as the weekly, that typically is going to be, because it's a bigger wave, tends to move longer, tends to be more secure, just like the weekly vertical crossovers are the strongest of all. Now, that's where we are as far as stocks go. Bit of a pullback today, starting the week off. Doesn't mean the up move's over, just a pullback. If it keeps going, then it could. So we'll keep our eye on things. There are other things that really beg our attention, maybe a little sooner. What do we see on 20-year bonds? Now, they are consequently up for the day, which is what we want to see. Derivative oscillator still losing momentum. Price percent oscillator is heading up still. That's good. Started the week off with a green up candle. Now we've been nowhere near that killer week in bonds. Friday the 13th of March was a good week. The week ending then was a great week for bonds. Bonds haven't recovered that yet, but we do have it starting off with a green up candle. Now we go from the weekly to the 2-day. What do we see there? Starting off with a red open box candle with a little wick on top. That means a slowdown in the up movement from the prior 2-day candle. We'll see what this candle looks like at the close of the day on Tuesday. And we do see that indeed the 2-day price percent oscillator is negative. When we see that rotation back over going up, when we see that rotation going up on the 2-day, we're going to pay particular attention to that. If this weekly chart is still in a confirmed up move, that would give us a 2-day recross and a potential for jumping in. That might also portend that stocks will be going down. Now, 4-hour chart, we can see we had down move on Friday afternoon, Monday morning, and then we had a green spinning top in the afternoon. Overall for the day, not up a lot, 0.80%, but didn't have a crossover going down on that 4-hour chart. Derivative oscillator still losing momentum. That's where we are. Pay attention throughout the course of the week for a potential cross, what we call a recross, going in the same direction that is up of the 2-day chart. If that occurs, we will, of course, be purchasing practice trades, practice shares in TLT. Now, let's go to gold. What is gold showing us on the weekly chart? Gold, of course, crossed over going up back on the week ending the 9th of April. Nice, solid week. Last week, starting this week off a little weaker, although nonetheless, gold is up. I'm up 0.71%. Derivative oscillator, still pesky. It's still negative. Price percent oscillator is heading up. That looks decent as far as the PPO goes. 2-day chart, flat. In fact, it was flatter until we had the up movement for the day. It looks like it kicked up just a wee bit. Derivative oscillator still losing momentum. We broke through that 2-day trend line, had a weak 2-day candle ending Friday. Then this one is showing a down movement. Now again, it was an up day, but this is tracking our average pace of price movement. Do study the Heiken Ashi candlesticks. Good training there. It will tell you a lot about what is going on. We go to the 4-hour chart. We see up movement in the morning and then tempered somewhat in the afternoon. We'll continue to keep our eye on things. Price percent oscillator heading down. derivative oscillator heading down. So we are, of course, looking, waiting, watching for gold. When that 4-hour chart crosses back over up, that would be nice. And again, when that happens, that will be a 4-day cross going in the same direction of the 2-day and the weekly. If you are in gold and staying in gold, I understand that. Just keep an eye on that 2-day. If you're waiting for an opportunity to get in gold, that 4-hour cross going up might give you an opportunity to do that. If and when it does it, just be aware it's not as strong as the 2-day and not nearly as strong as the weekly. If you got in on that weekly, of course, you had a grand opportunity a couple of weeks ago. So we'll continue to watch, see what there is to see, what there is to learn. That's where we are, folks. For those of you who only care about those 4 charts we've covered for quite a while, you are done for the day. God bless you. If you hadn't purchased our book, please do so. And 3 new Patreon members here recently. I so appreciate all of you. Thank you so much. We sent out all your materials to you today. And remember, when you become a Patreon supporter for as little as $30 a month, you get to join in that training that we have every month, that live question and answer training session that we have. Typically, it's the first or second Wednesday of every month, 12:30 Eastern Time. And we also have all sorts of special training, short chart training, long chart training, Bitcoin training, all the special stuff we do for our Patreon supporters. We appreciate you so much. Now, let's move on to oil. What do we see oil doing? God, when I checked oil out this morning and saw it plumbing the depths, let's start on the weekly chart with oil. When I checked it out this morning, it was at its low at $3.60. It was down like almost 10% or something crazy. It did recover a little bit. It started at $4.87, and then dropped almost $1. Actually, what I mean almost $1, over $1. I mean, just hammered down. It closed the day up a little bit, but still below its lowest low at like 373, something like that at the end of the day. Derivative oscillator, we see it losing downward momentum because it really hammered down, then went sideways. That oscillation up still, and it's negative, but losing some of that downward momentum is just from those 2 weeks of upward or sideways sliding. These last 2 weeks, of course, that's what's dragging the price percent oscillator, which is what we pay the most attention to, down. So gold really, really just continuing to get hammered. We see that 2-day trend line. Well, we don't have a trend line on it, but we can sure see a downward trend. Derivative oscillator losing upward momentum. Price percent oscillator heading down, pulling away from the red signal line. We look at that 4-hour chart. That's where you see that real hammer down in the morning, and then again maybe a little bit of a recovery in the afternoon. But gold just getting hammered. How low will it go? I don't know. But wow, all the way from what, 12, up right around $11, $12, just getting hammered down to less than $4. Just terrible. So for those in the the American shale industry, offshore drilling and all, you just can't even afford your rent on the equipment at those kinds of prices. So very, very tough. Big effect on our economy, of course, with oil being that low and all of those producers put out of business. Now, and let's go to Bitcoin. What do we see there? Bitcoin up about 0.5% for the day. We look at the weekly chart. What do we see so far? Just a sideways slide. Price percent oscillator still heading down. Derivative oscillator losing some downward momentum on that weekly chart. 2-day did cross over back on the 2-day candle ending Wednesday the 15th, but what have we seen? Hasn't popped up as high as it did back on the 2-day candle ending Thursday the 9th. Really just a sideways slide. Price percent oscillator is moving away from the red signal line, but again, no huge recovery happening there in Bitcoin. 4-hour chart did manage in the morning to see the price percent oscillator slide over, but still just really a sideways slide at this point, tending up. So Bitcoin, after its substantial losses, bottomed out and is just sort of tracking along, trying to find maybe a bottom. We'll see. Nothing to talk about there as far as any opportunities to practice trade that. Look at real estate. Boy, real estate lost about half of its value, has recovered some of it. I mean, it was around the $100 mark before the plunge. Now it's at about 74. Nice thing about that is it's pretty easy to see the percentage there. Lost about 26% up to date. Now again, this is real estate investment trust, a lot of commercial property, those kinds of property holdings, but gives you some idea as to the impact so far. We look at the price percent oscillator. It was heading up a little bit. Now it's heading down a little bit. It was down for the day 3.72%. Derivative oscillator losing downward momentum. Let's look at the 2-day. 2-day crossed over back on the 9th. It really peaked then, and all we're seeing is sort of sideways slippage and down. Price percent oscillators lost some of that momentum, but still heading up. Derivative oscillator also losing upward momentum. Go to the 4-hour chart. It crossed over going down back on the morning of Thursday the 16th. Popped up on Friday morning and afternoon, about the same, and then down on Monday. So real estate not finding a bottom itself either. We're just waiting for folks to start kicking out more of the supports. At least that's what I'm suspecting. But again, I'm going to let the charts lead me. It doesn't really matter what I believe, my friends. I've studied the past. I've seen these kinds of things happen before. I'm talking about markets crashing. I know what the psychology is. I understand that. We talk about that in Corona Investing. The psychology right now is denial. You see it all over the place. I mean, you can read an article where it says, oh, the Fed's going to pump in enough money and the market will just go back up, keep going up forever. Yeah, sure it will. Sure, everything goes up forever. It's going to defy the laws of gravity, the laws of markets, the laws of everything. Now, again, when you cheat and you keep businesses alive that shouldn't be kept alive and you print money backed by nothing, you get a Weimar Republic type scenario where it takes buckets of cash to buy bread and it's worth nothing in the end, but that end could be a long, long way off. And don't forget, in the end, we're all dead. We're not going to hang around that long. What we're going to do is we're going to follow these charts. We're going to keep in our mind what rationality tells us and what the past has told us, but at the same time, we're going to balance that against what the markets are telling us by the charts, because the charts are king. What we think, I mean, you will go broke in your practice trades thinking that you can outthink what you're seeing on the screen. It's nice to know what you expect, but it has to be quantified and qualified by what you see on the charts, because the only thing that matters, my friends, is price movement. God bless. All the best from the whole team at Charting Wealth World Headquarters.